At 2 p.m., Fed Chair Powell is going to talk, but we're also getting some comments, Steve, from the interim St. Louis president. What are we learning here?
Yeah, kind of unusual that we do have an economic speech from the interim president, Kathleen O'Neill Pace. She says the Fed can afford to wait before deciding to hike again. And in that statement, you see she has this slight lean towards hiking. She says if inflation progress stalls, quote, the committee should act promptly. Until inflation is clearly and convincingly headed to 2%, she does not want to take another rate hike off the table. She reveals in her speech that in September, she was one of those who had forecast another rate hike before year end, one she seems willing at the moment to put on hold. She says monetary policy remains modestly restrictive, not overly tight. On inflation, she says there's been progress, but recently it's been moving more sideways than down. Recent labor reports suggest to her that the market supply and demand are becoming better aligned. And then on a critical issue of financial and tightening credit conditions, she does say they have tightened over the past several months, and higher rates are beginning to constrain economic activity. The tightening of financial conditions, she says, supports a decision to hold rates steady, at least for now. And those conditions, however, echoing what Chair Powell said, need to persist to have an important impact on bringing inflation down to 2%. And she's one of three speakers we've had already this morning, Scott, all kind of with the same tune, which is that we're still in this wait and see mode in terms of whether or not we need to hike it again, and also kind of wary about inflation and not having the progress that they have wanted recently, but waiting to see if the lags of monetary policy and tighter financial conditions do the job for the Fed.
I wonder, Steve, what we're going to get from the chair today in his own remarks at 2 o'clock is one of the central issues that we've been discussing every day as stock market investors, the investment committee, is whether the market's gotten this right, whether they've gotten Powell right. It was one of the key events, obviously, that spurred the rally in stocks. Once again, this view that he was more dovish than expected. Does he need today to push back on any sort of perceived dovish commentary that the market took it for?
Well, I think you're asking the right question, Scott, and I would add another question to that. Does Powell perceive that the market has it right, and does he feel a need to tweak the market expectations? If you look at the probabilities for the next meeting, they're down in single digits, high single digits, but just 9%. I'm looking at them as we're talking here. For January, just 17% for a rate hike. So the market has taken that rate hike off the table. So Powell has two choices here. The first is to actually jawbone that probability higher if he feels a need to, or he can let the data do the talking. It's just next week, Scott, that we're going to start getting CPI data. We'll get some retail sales data as well. And if the market sees that retail sales are strong again, as Stephanie was talking about, if the market sees that inflation is still doing that sort of sideways to up thing that it's been doing recently, the market might reset on its own. I think Powell's probably going to take this neutral tone that has become such a part of Fed speak these days, neutral tone with a kind of a bias still to hike, and let the data do the talking and let the market react to the data the way the Fed thinks it ought to.
All right, we'll see in a couple hours. Excuse me, a couple hours. Steve, thank you. Steve Leisman, senior economics reporter.